So technology is like survival now for a bank. If they don't have technology, they will not survive or the customers won't let them survive.
Any organization and in specific banking, any ROI that is measured is going to be very imperative. The ROI may not always be growth. The ROI could be better risk management, better decisioning. Your ability to price is better. So I keep tech as a 101.
Is AI going to cost jobs in banking? Does AI drive profitability only in terms of human capital costs, or does it drive profitability otherwise also?
It may create certain redundancies for sure, especially in terms of mundane jobs that you do.
In one of the forums, you said India needs a sovereign financial data mart as a national asset. You said that's going to jumpstart AI to the next level and it's going to be critical in the AI journey. What did you mean by that?
That's the reason why I was always maintaining that creating our own sovereign cloud, creating our own sovereign data capabilities, building our own IP around it, and then building our own security infrastructure and enabling it for utilization is what is going to drive the next wave of innovation and, more importantly, at a service capabilities, utilization capabilities at much lower cost.
This is what will create the data revolution in our country. Hi Mahesh, good evening.
Good evening, Chinmaya.
Welcome to Falcon's first ever podcast. Viewers and listeners, those who don't know Mahesh Ramamoorthy is the Chief Information Officer at Yes Bank. He has over 3 decades of experience in global banking and infra space, including banks like Barclays and giants like FIS. In fact, I had the privilege of working under Mahesh at FIS, and it was absolute privilege there. Now at Yes Bank, he actually drives a lot of initiatives across cloud adoption, AI, fraud detection, creating an API-first ecosystem, and many other things. So, Mahesh, before we dive into the heavy stuff, just wanted to know how is life outside the CIO's chair?
Thank you, Chinmay, and really appreciate having me first over in the series of podcasts that you guys have started. I think life of a CIO is only getting more interesting, challenging. It is for us to make it more interesting. But outside of that, it gives you the opportunity to network, to connect, and more importantly, the opportunity to share what you do with a larger audience beyond banking and beyond tech. So I think it's a great opportunity. I think 3 decades has flown by in my mind, and only look forward to the pace of change that's emerging any second year. That's what I would call it.
Lovely. So you mentioned networking, but I distinctly remember our days at FIS, and you used to clearly tell us saying no calls on Sunday, because Sunday is the day you go for grocery shopping and have your dosas at Matunga, like a typical, Tamilian staying in Bombay. So does that still continue? Do you still get the time and the energy to do that?
Oh yeah, means Sunday first half is dedicated to self. It's a time that you probably reflect upon. So which means reflect means get to the temple, go meet your friends, and go to your favorite place back in Chembur, and then try and see what best, because it gives you a disconnect from what you do on a daily basis. And then come back and you're starting second half of Sunday, you're back on the job. So that's how I would put it.
I always feel that, for technology, downtime is a bad word. But for technocrats, downtime is very important.
Yeah, means you need to have the balance, and I wouldn't call it a work-life balance. I would probably put it differently in the sense that you need to weave your life into your work, or in the other way around. I think otherwise you have the opportunity to get completely subsumed, where you need to draw your line in terms of what's priority and how you go about doing it. Build the right team and then leave it while you focus on certain other things. I think that you learn it over time, and possibly the art of managing it is something that you learn as you go along the way.
Oh, that's great. That's great. No, it must be a tough job because, Mahesh, if you remember the early 2000s, when the regulator used to put embargo on banks, it was usually because of frauds or lack of compliance. But if you see the last 2 embargoes, they came because of lack of technology. So it must definitely be a tough job being a CIO and managing technology. So technology is like survival now for a bank. If they don't have technology, they will not survive either regulatorily or the customers won't let them survive. So what's been your key focus areas given this environment?
The way I look at it is Today, technology is at the heart of anything that you do in a banking. Whether it is in terms of customer service, whether it is in terms of onboarding customers, or in terms of back office, or in terms of risk management, or in terms of decision making. I think the entire gamut of work that we do in a banking has technology, and technology is driving banking rather than enabling it. Now, when you make that shift, regulations are also evolving over a period of time, right? So if you look at the regulators, they are also learning through the process. They are more coming out with certain expectations which are evolving over a period of time. So which means that there is never a dull day. It's all about saying, how do you really get the right thing? So has to be compliance first. That's what you really need to think for. So whatever you do, whatever capability that you provide to the service, and innovation can always be done as long as you are compliant and making sure that you are not losing the trust of the customer. So when you create certain thematic imperatives, if I may call it, then you are obviously focusing around whatever you build, whatever capabilities you write, what kind of security you look at, and what kind of measurement that you have to ensure the governance is in place. Since these are some imperatives that keep evolving, it is absolutely important. And that's what drives you, because at the end of the day, you have to always make sure that, and I call it the rear view mirror, which means the assurance functions of any banks are ensuring that they measure and keep you honest if things how they go on. For example, whether your change management is properly done, whether in terms of your data architecture is in proper shape, whether your backups and your change management, then your entire customer service capabilities, everything is in a line. I think there is a lot of things need to be done. If you go back 10 years ago, there was a very different kind of expectations from the regulator. We have the opportunity to go back to regulator with say, we'll come back to you in 2 days, 3 days. And it's nearly online. Everything is online from submission perspective, the review perspective, our ability to give them assurance that we know what we are doing. I think that's most important. A regulator only needs assurance. Now they create policies, they create frameworks, they create master directions. How the bank is really bringing it into their process and ensuring that they have the right governance to provide the assurance is what they look for. That's how, if you look at it from that angle, I think you probably will not look at it as an overhead, but you look at it as a part of your process.
So that's wonderful. So initially, I mean, all this takes investment, right? So the bank has to invest in technology, and most arguments previously were saying that please invest in technology because it's hygiene. You won't be able to do without it. But now I think boards are also pushing, and you have always maintained that a CIO's role is in fact linked to financial outcomes and board KPIs. So would you want to elaborate on that in terms of how technology is actually driving financial outcomes and board KPIs?
Chinmaya, the biggest one would be, at the end of the day, technology is going to help any organization, and in specific banking, either expand its growth, acquisition, distributions, create better customer service, which means there are some capability scores, NPS scores, or create better risk management capabilities, or create better decisioning from a product pricing perspective. So which means I think what is going to be very important is, are you establishing the right kind of metrics for measurement? That's going to be important. So if you invest say 100 crores. It's very imperative to understand what's the business case driving it. And that business case must give its return. Maybe it is slow in the start, but then it has to catch up. So any ROI that is measured is going to be very imperative. The ROI may not always be growth. The ROI could be better risk management, so which means you mitigate frauds. The ROI could be better decisioning, which means your ability to price is better. The ROI could be better customer service, which means your net promoter scores will start improving basis on how you deliver efficient services. It is very important that as you start investing, there is a very clear linkage between investments in technology, capabilities being built, to the way it is going to drive an outcome. So which means that a technology in alone throwing money behind some things is not going to be helpful. It is imperative to ensure that we are in step with what the business and the bank strategy is looking like. For example, if you're looking to say a bank is going to be retail, within retail it's going to be SMA focused, then all the energies of what your investments is needs to be there to support that growth. Then you can't say that, I love to be there, but I don't know what to invest. Then that's not right. A CIO is not about technology. A CIO is about how he or she is able to understand the business imperatives or the risk management and the bank's imperatives, and then weave that within tech. So I keep tech as a 101, but being able to now tailor it and curate it for them with the need of the right ROIs to measure is going to be the most important. And that's what we are there for. I think if I say that I'm just a technology guy, I think that's not the role that we are going to look at.
No, 100%.
Yes.
Definitely.
I think that's how it is, I would say.
Great. And now that we've spoken about how investments actually are linking to a better, market fit, better product fit, financial outcomes, what's the usual strategy? Is it build? Is it buy? Is it co-create with fintechs like Falcon? What's the strategy like for CIOs?
So I think it's a very multi-dimensional question, Chinmay, but the way I would look at it is, first and foremost, we'll have to assess the kind of demand, what the expectations are from the business. That's very important. When you have the expectations from the business vis-a-vis the competencies and capabilities that you have, you really create a kind of a matrix which essentially says how critical is it to the organization and how critical the IP is to the organization. That's going to be very important. And once you decide that IP is absolutely important, and you have the capability and the competency, then you try and build it for yourself, or you get it built by someone. What is going to be important is, if at the same time you are looking at certain things where, like let's take an example, a credit card ecosystem, system of record, a core banking system of record. I don't think it is a bank's core competency to build such a large capabilities. So in those cases, it is better to buy. And nowadays, the emerging trend is to how do you partner with partners to be able to provide a SaaS framework with fintechs and with other players to provide SaaS. So the decision whether to build, buy, or take it as a service or co-create is basis A, the expectations that are laid out from the business on what they want to do. B, in terms of risk that it possesses to the organization, that it gives back to the organization. 3, the ability for the organization to have better control over that and better governance over it. And last but not the least is in terms of the kind of security that you will have to take care of. Because at the end of the day, we are in a bank, we are playing with data and we are playing with customer data, which means what kind of security capabilities that you can manage within that. So I think there are some decisions, and what's the cost associated with building versus buying.
Right.
So I think there are a lot of measures that we go through. Any organization for that matter, it's a part of a decision-making process. And some are easy, some are tough, some are complicated, some will be hybrid. So I think at the end of the day, there's no single answer to it. But it is all based on situations and how technology evolves and the adoption of it. That's how I'd call it.
No, true. I mean, every bank, even if they co-create, will definitely build guardrails to make sure that customer data, and especially with this data privacy, DPDP Act coming in soon, I think it's very imperative that banks actually build guardrails to make sure that the data is protected, the customer is protected.
Absolutely, Chinmay. Without a doubt, today the dynamic nature of how technology enables you, I think it's very, very imperative for us to be careful. And decision making has to be based on the fact that you have the right kind of perspective to it.
So, we can't talk about technology and information and not talk about AI. So let's talk a little bit and move towards AI, and specific to Yes Bank. Like, could you tell us how Yes Bank is guiding, how Yes Bank is actually embedding AI to drive results? Like, see, for most laymen, I think the first handshake with AI are chatbots, right? Which allow them to locate the nearest ATM, locate the nearest branch, or ask questions like how do I get Forex card and things like that. But AI is much more than that, I'm sure. So could you talk more about that and also tell us how Yes Bank is actually embedding AI into the life of an everyday customer and to build technology frameworks?
AI is obviously the latest buzzword everywhere, right? So, if I were to just step back a bit, has AI been in existence? The answer is always a big yes. Possibly some has been the way the maturity has started to evolve over the past, I would say, 12 months to 14 months has been quite earth-shaking. But having said that, I think what we've essentially done is we have calibrated how AI need to be put in place or AI can be embedded within ourselves. So we started off with defining what I call it as an AI strategy. And the good part is that now RBI has very recently come out with its framework around how ethical AI should be used, how we should really look at the kind of uh, certain imperatives, as RBI calls the 7 sutras to it, and 26 specific action points. Very interesting document.
Oh, interesting.
But given that, it essentially then gives any financial institution and more importantly banks the opportunity to use that to build your AI strategy, AI governance. What we have essentially done is we've essentially calibrated where we are starting off. As you rightly said, we did not touch customer data. A lot of the data, initial experiments, I would call it, more than POC, as we've gone into production, has been using our process manuals, compliance, circulars and everything, trying to understand how we can do better service to our own staff. Because today, we have any bank would have close to about 1,000 plus SOPs, as we call it, process notes, about 2,000 plus compliance circulars. And anyone who joins in new may not know what is the best thing to do. So if you create those capabilities in vector deviate and then create the right prompts, then it starts giving the end users the touch and feel of how AI can help them.
Yeah.
Correct? We've gone a step further in terms of using certain capabilities of AI to see how we can help our operations, finance operations, and other places to start using AI to be able to much more efficiently process invoices, if I may say so. But I think now comes the good time. Now comes the time where rubber hits the road, where you start using AI in mainstream activities in terms of customer service, contact center being the big one, sentiment analysis of the calls, how we can help AI in terms of your credit administration process itself. How do you build your credit administration memo, automate about 90-95% of it, such that you can create efficiencies in terms of that relationship manager being able to create it faster and turn around being better. And I would say certain operational aspects, like for example, you look at fraud management, you look at your simple things like reconciliation. I think a lot of areas have started to double click in terms of reality. And we are now essentially working closely with a set of partners in terms to say, how do you now mainstream that? Because now but what is most important, Chinmaya, is going to be how well have you defined your AI governance? If you don't have your AI governance in place, you can't establish the auditability and explainability. Both of these require that you have the right framework of data in play. So there are certain imperatives. And these imperatives are what an organization needs to work on. And as you start tapping into customer data and building models, it's going to be very, very important that you get your basics right. Diamond doesn't comes in terms of models, capabilities. But the fundamental of all of what you're going to do in AI is going to be based on data and the quality of the data, and hence how you train your models to use that data.
Right.
I think these are more fundamentals. Any banking institution has tons and tons of data. Being able to make sense of the data into creating certain knowledge is going to be very, very key for any success.
Wonderful.
The layer on top of creating intelligence can be as powerful as long as you know that you have the right knowledge. That's how I'd call it.
No, I think this is very interesting. A loaded question
Sure.
on AI. Does AI drive profitability only in terms of human capital costs, or does it drive profitability otherwise also? Is AI going to cost jobs in banking?
So, the way I look at it, Chinmay, is it may create certain redundancies for sure, especially in terms of mundane jobs that you do, which otherwise we used to call RPA in the past.
What is RPA?
Robotic process automation.
Automation,
Remember? That's what some people have. The earlier avatar of automation was there. But now with AI, you're able to combine it with that and make it much more efficient. As we start deploying it, you will see certain benefit cases coming in, but the benefit case would come predominantly in areas of customer service where you will start to use that to analyze calls better. So the sentiment analysis of a customer, because today when your customer calls a contact center, you don't do any analysis whether the customer is heated, whether the customer is completely, yelling on top of the voice for a service, because you are as good as what your service agent is looking at. AI can probably help you analyze that better and summarize the call better for you. And then possibly use that in the back end to say, prompt the the agent to probably create some intelligent viewpoints such that, what, the customer is a bit agitated the way we see it. Why don't you give him this particular reward?
Yeah,
So that he is probably taking it.
absolutely.
So certain areas of that side in the customer service will be a great use case. Certain areas, I would say that if at all I would look at AI making a lot of sense to any organization is going to be on digital risk management. I use digital risk management because today a lot of what we do is digital payments, digital transactions, cyber security. So trying to now triage structured, unstructured data capabilities and make it much more secure is where AI will play a big role. So to me, something which is not humanly possible today, I would say AI, the use of AI can help you bridge that.
Right.
Some things where you believe it is mundane, AI can replace. So I wouldn't say it will replace a lot, especially in the financial industry. I would say it will start to make you think differently. We had the same problem 20 years ago when computerization, everything happened. We were concerned what's going to happen. So I think from there, now if you look at it, life has moved. Now we had the internet boom coming in. Now we have the next wave of boom coming in. Yeah. So technology will evolve. I think being afraid of it is not the right thing, but trying to help yourself get in step, which means I would say help your own teams to learn more,
Yes.
make better use of it.
Sure.
Is going to be very important. So I keep telling my team that unlearn to learn. You can be doing the same thing, you'll get redundant. So AI is only going to pose certain questions to yourself.
Right.
It is still early stages. I think
Yeah.
I wouldn't. It gives you the opportunity to figure out what is going to impact you. And I think the impact will start coming in the next 18, 24 months, not before that.
Right.
But it also gives you the opportunity to set yourself ahead, yourself and your team.
No, absolutely. I mean, I want to just state a very interesting case, and this is more, more coming from what we did. So there was a bank who was running a certain product, and they kept sending a reward message to the customer saying you have 200 rupees off on cafe coffee day, right? And they had an app and everything, so they knew the location. It was geotagged, and the best part was the closest cafe coffee day was 20 kilometers from the guy's house. So what we did is we built a small AI layer into this thing, understood where the geolocation is, and there was Chayos, there was Blue Tokai, there was Third Wave, so many things within 500 meters of his locality, but no cafe coffee day. So we just changed that. And immediately when we did that across a large section of the customer, the bank saw usage at the product. So I think AI is definitely helping tailor make offers and rewards to their customers?
I think use cases could be many. I think to your question that I left open a bit was a return on the investments in AI. Right now, it'll be difficult. And I tell you why, because the cost of creating AI, like a GPU infrastructure, is still expensive. It's as good as where we were when initial days of PCs came out. It's expensive, right? Today, so the cost of compute is still high.
Yeah.
But eventually, I would see that it will become a new norm, and as adoption starts to increase, the cost of GPU will start to come down, and come down quite. It will follow the cliff, and once it does that, affordability of building use cases on AI will jump more. It will
Right.
jump tenfold.
Perfect.
Today it's tough. Today it's more of a FOMO. It's more of a join the bandwagon, don't be left out.
Yeah.
Experiment in a few areas. But if you double click to an ROI may not work that much. It's going to take some time before it gets there. I think, but you should not miss the bus in terms of learning, putting yourself through the learning, because you will fail. Today, any new technology, any new capabilities that you introduce has certain failure rate. So for you to understand the failure rate, come back out of it faster before it burns you is going to be very important. So AI is one of them. So you have to go through it, understand it, and then you can fine tune and calibrate yourself out. That's the way I would put it.
That's wonderful. That's wonderful. So, Mahesh, you are part of several forums and you speak at several forums. I'm reading this out. In one of the forums, you said India needs a sovereign financial data mart as a national asset. What do you mean by that? And you said that's going to jumpstart AI to the next level, and it's going to be critical in the AI journey. So, what did you mean by that?
So, Chinmay, the very fundamental to anything of AI is going to be customer data. Data. And in a bank, everything is on customer. Today, if I have to execute any intelligence, it depends on certain large language models, which essentially is not built in India. Today, as you see, a lot of this is built on foreign soil. It's being extended, guardrails are there, but I think for us to absolutely steamroll, we have to know our data. We have to ensure that we build our own data environment for the bank, which is sovereign.
Ring fence it also.
Ring fence it, and it has to be under our governance, right? So if you look at it, about 8 years ago, the regulator came out and said you cannot have a payment processing outside of India. If you want AI to be successful, it's only going to be when you have your customer data consolidated in a way that it can train for you within India. The training of that and building of the LLMs for that data has to be in India. That's when you can freely use it. That's when you can be absolutely clear that your data is within your country and not outside. Today, if you look at CIBIL score, right? CIBIL scores are based off India capabilities, right? If the same was traversed to the US or to China or anywhere else for that matter, you'll be suspect about it. There's a reason for it, right?
Right.
Because you don't want your citizens' data should be shared somewhere else.
Absolutely.
So I think fundamental to us, onto any institutions developing and utilizing and creating more use cases is data and the ability to create deep learning capabilities and build that IP through the LLMs within India. That's sovereign.
Right.
That's close to it. And today you should have that such that you then can build a lot around it, right? Then everyone will latch on to it. So which is very imperative because see, one of the big things you must understand, India doesn't have good IPs.
Yeah.
We have good manpower, but we've not created own IPs. Today, anything in any organization is all dependent on products that are imported, whether it is a core banking, a Windows, or whatever. That's unfortunate, but that's reality. Whether it is the Azure cloud, whether it is all, everything is something that we are dependent. So I think it's very fundamental for India to have its own sovereign capabilities put a lot of money into investments into creating IPs. And if you do that, it's going to set off a very different reaction. That's going to power the next wave in my mind. It is painstaking, but if you don't do it today, forever you will be dependent on someone else to build for you, build the innovation, which is not going to sustain. Now, we've seen in the recent times certain decisions how things have gone south for us as a country.
Yes.
So I think it's a wake-up call for us, and that's the reason why I was always maintaining that creating our own sovereign cloud, creating our own sovereign data capabilities, building our own IP around it, and then building our own security infrastructure and enabling it for utilization is what is going to drive the next wave of innovation, and more importantly, at a service capabilities or utilization capabilities at much lower cost. I think that's what is going to be the differentiator.
No, this is great. I think this is what will create the data revolution in our country. I am pretty sure of it. I want to take you up on one thing that you said. You kept mentioning cloud, and you started. You were very vocal about structured cloud infrastructure for banks. Can you talk about the security for clouds versus controlled data centers? So India has largely deployed data in controlled on-premise data centers, and now there is a new wave of cloud technology. Would you want to, understand whether what is better, what are the benefits, what could go wrong?
Cloud is obviously a new cloud capabilities are a new wave of technology which has always been prevalent but is picking up well. So what can you deploy in cloud? What does cloud give you advantage over an on-prem data center, a co-located data center? Cloud gives you the ability to decide what you want to do and what you pay for depending on what you use. Correct? Simple math. In an on-prem, you put it on, lights are always on. There are very few where the lights are off. Right? Because you're investing, the power is on, the capabilities are on, you're invested in the capital of the infrastructure. Correct? Now, in a cloud, if your application is next generation and you're creating a lot of spiky load, for example, there could be applications which are spiky in nature that it only operates for 3 hours, it peaks at 80% of the utilization. Rest all the time it is at 10%. Frankly, if you were to run it in on-prem and this thing, it's waste of resources.
Sure.
That's a great use case as long as that application or capabilities can utilize the power of running on a cloud, because the architecture of how cloud behaves is very different than how on-premise. If you just push an application onto the cloud, there is a high degree of chance it won't work and it won't give you the benefits.
Yes.
So I think to us, as in the financial services, it is always about understanding what your application landscape is. Most of the banking institutions have legacy system of records. That may not be cloud compatible, not give you the advantage. But there are front-end capabilities which are now coming up well, whether it's a mobile app, whether it's online, whether it is certain other things where you can happily put it on the cloud because they are very spiky in the way it happens. You will have peak load coming in, say, in spurts rather than consistently being there. Great opportunity for you to use the cloud and also manage your expenses better. So your expenses are in step with the utilization.
Sure.
And security is today evolved well. Today, I think cloud security has evolved well. So I think every organization is not linked to one, but at least there are one or two cloud service providers. And the hybrid approach does give you flexibility in terms of cost and in terms of moving across data centers or service providers. And in many cases, even act as a backup. There are situations where we even use cloud as a backup. You don't pay for it till it spins up. So that's a great story. So I think how one sees it as an organization, what are some of the good use cases is going to be very important.
True.
Without that, if you just dump something as default in cloud, recipe for trouble.
Very interesting. So Mahesh, you've kept saying that Yes Bank, you've created a whole API infrastructure, you've created a marketplace model, and a lot of what uh, you know Yes Bank wants to achieve uh, may not be done by themselves, right? So you'll have to collaborate with fintechs like Falcon and many others. How do you think fintechs will help you achieve what you need to achieve?
If you step back and look at it, an organization like a bank can only achieve certain success by itself. But if it has to grow, it needs distribution. And the distribution is by collaborating with a lot of partners.
Right.
Some of fintechs who are very narrow, some of the fintechs have a broad breadth. So it is about how you collaborate to expand your reach, right? Which means that if you have capabilities where you are a specialization in, say, mutual funds or, or personal wealth management, but that personal wealth management is as successful only if you are able to have an account or accounts linked to it.
Yeah.
And as you get into that journey, to be able to then collaborate without losing experience with the bank is the next wave. So, which means that a bank like us, it goes back to what you asked me first, is we'll have to start seeing how we create our entire API infrastructure as a product. And when I say product is, if entities like Falcon are going to be signing up with us, say to acquire my credit card customers or to acquire certain other type of customers in a product, no, we don't start building it from scratch.
Yeah.
You subscribe to it, which means we have created a product. The product itself is a mix of headless, I would say, architecture, which essentially has a mix of different APIs stitched together through a good microservice architecture, and then is available to any organization or a fintech or partner to be able to use it with certain guardrails, security framework.
Yes.
So that's going to be that. It's going to help us in terms of expand our footprint inorganically. So I think the partnership between a financial institution and a fintech is no longer going to be who hits the race first, but it's about how you collaborate to expand. I think that's what I would look for. And for that, bank has to be very powerful in creating a headless, productized API.
Yes.
So I have a product manager called API. I have an API product manager.
Yes.
And his or her job is to make sure they're packaging it and they're pricing it. No, it could be internal focus, business focus, but if you don't package it, you don't price it.
Yeah.
Because otherwise you just don't measure it. So I'm saying,
True.
so we have to do that. So those are some things which I think is where everyone is headed towards. And we've done well. So as a bank, we've
Definitely
done
you
extremely well.
Definitely.
With over 300 plus integrations and about 3,000 plus, I would say, payment infrastructure. I think we are in a very different space.
Truly, you have done well. So, I think we've been talking quite a bit about, how you've done, what's your views on the whole policy, what Yes Bank has done. Let's talk a little bit about the future. So, banks in 2040, do you think they would be digital only, headless as the word that you used, with a lot of orchestration on top, or would it, still be controlling the core? Where do you think banks are in 2040?
So I think, in my opinion, I would not visualize 15 years, but I would keep it a decade, right, which is about 2035. I would say bank will change a lot in terms of how it delivers or how it manages itself. So which means a lot of things are going to be API capabilities, API led, data managed, AI driven, and more importantly, highly interactive risk management. So you're going to have these imperatives definitely. A lot of banks will start to unbundle a lot of its legacy infrastructure and change the way it is essentially gear its survival it's today. So a core banking may not be core banking in the way it is. It could be a completely, I use the word headless again,
Yeah.
but and it is
Interesting.
just a system of record. But otherwise, I would say that banks will use emerging technology to change itself, to unpeel a lot. Banks will focus more and more on how they're able to bring sense of the data and then try to use technologies like an AI and the next generation that's coming in to provide more contextual and more intuitive information, both in the front ends for experience or back end for risk management. I think that's going to change. Means definitely today there's a gap in how utilization versus risk management happens. So there is going to be significant amount of, I say, shift left that will happen in the next decade.
Very, very interesting. You see India as a market for digital only banks in the next decade, like you said? Or do you think that a bank won't be able to survive being a digital
So
only?
I would say that I wouldn't call it as digital only banks. I think that's a bit unfair. What I would call it as, you'll have banks who will have digital led only capabilities.
No physical branches.
No physical. For example, you would have a medium sized bank which will say, my service physical touch and feel branch capabilities are going to be there should you have anything as a backstop for you to come and do it. Otherwise, everything else is digital. Like, for example, a bank like us, I think we are about 1,300 branches. Can we service across the nation? Yeah, we can,
Yes.
right? So we are already there. But what is going to be is that I don't think physical branches will start to shrink. It is going to be available as a backstop for any customer to walk in to say, I can still touch and feel.
Yeah.
But otherwise, 99.9% of the services will continue to be digital. So, today, if you, for example, if you look at Indigo, let's take I don't think you're looking for an Indigo office anywhere.
Yeah.
You will it is either through a partner or their app, full
Yeah.
stop. I think banks will be more or less there. There
Okay.
you're okay, but here it's trust, your money.
Yeah.
There you spend,
Right.
here you save. So
True.
which means you will have smaller avatars. I think the phygital part of it is going to expand a lot.
Absolutely.
But yes, your ability to interact with the bank will be more through digital ecosystems. That's the change that will come.
Most of our domestic travel is now, digital. Like we use DigiYatra, so there is no touch and feel with the security. We drop our bags at an automated drop stop, and then we proceed to the security where obviously you need the metal detector and other stuff. But yeah, I mean it's like I think banking will definitely
Will change.
proceed
Will
that
change.
way. Will
But yeah,
definitely-
you will still have physical infrastructure in
Yeah.
a very different shape and form.
Right.
As a full backstop. You will
Right.
still want to know if such a thing exists where you put money, you will still go there. At least to see. Yeah.
Yeah, true. So, what regulatory or policy shift in the next decade do you think will define?
I would say that a lot more, if you look at compliance led, there is going to be significant amount of focus from the regulator around how do you manage data, how do you protect the data, and how do you use the data.
Right.
So I think that's going to be a lot there that the regulator is going to be focused on. Regulator is going to be focused extensively on how well you're going to do risk management practices and how you're servicing your customers.
Yeah.
So I think banks, if you look at regulators, they will encourage banks to innovate, but not at the cost of certain absolute must-haves from a compliance expectations perspective. So there is going to be, and we have already seen the pace at which regulator has caught up.
Right.
We probably are very few of the countries where we at least have a framework for AI,
Yes.
which wasn't the case some time back. So regulator will not get too prescriptive. They will show you guidance and expect certain you to use that
Right.
to calibrate yourself. They will expect you to do very, very strong governance. So there is going to be a lot of focus on regulator around not just technology governance, but your the business governance, your entire balance sheet. Because as you go digital, uh, there is also even more risk associated with it. So how do you managing your entire balance sheet is going to be very, very important.
So there is a term called the WhatsApp moment, right, of life, where typically once WhatsApp came, even people who are 60 years old, 70 years old started buying smartphones and started chatting and exchanging photos, family groups, friends groups, school groups. So many things changed, and UPI is one of the WhatsApp moment in payments and banking. Do you see any such WhatsApp moment in the next 10 years?
I think, in my opinion, is going to be as AI evolves. Personally, I don't see the need for apps. It will all be prompt based, correct? So, which means today today you buy a phone and you are downloading apps and making yourself keeps shifting across apps. I think that will change to making it more prompt driven
Right.
and more interactive. So that's going to be a big shift the way I see it. So your mobile is going to be far more powerful than where it is. And you may have your mobile itself cloned down to the cloud. And so there is no reason why a mobile, you will have a smaller footprint and you're virtually interacting with your mobile on the cloud. That's going to be a big one. I'm saying I can see that happening.
Wow.
So that when you shift across, you're not losing data, you're just seamlessly moving across.
Right.
So I do see some changes there. It's going to be a next generation. See, today interoperability is only at the operating system. But interoperability going to come from a very different perspective. Today, if you have iPhone, you can shift phones without any problems, right?
Right.
Because you dump it on the cloud and go back and dump it back.
Right.
But tomorrow, whether you buy a Samsung or an iPhone or whichever, Android to iOS, you don't need such physical, so much big hardware in my
Right.
mind.
Interesting.
You can do far better as long as you virtualized it. And that's where cloud is going to make a big change for us. I think at an individual level, it will become more subscription driven.
True.
And that's going to be a good way forward, is my thought. That's my personal view.
No, that's great. That's great. So today a lot of banks rely on global MNC infrastructure to run infra, and Make in India has been now there for 11 years, right? And gathering a lot of steam every year. So, do you think by 2040 you'll actually have Indian companies running financial infra in most of the banks, not just in India, but also help take these banks global?
And Chinmay, it better happen. So let me put it the other way. It better happen. I think if we have to be the second or third largest or fourth largest economy, third largest economy, and be self-reliant, we better make sure that we invest in creating our own capabilities. Invest in that kind of capabilities and IP. If we don't, we are going to be forever dependent.
No,
So I think
true.
the Bharat cloud, as we speak, is becoming a reality. It will evolve, but I think in the next 10 to 15 years, our ability to define ourselves the way the technology has maturing out is going to be the name of the game. Otherwise, you're going to be constantly dependent on someone else dictating you. It's no longer a warfare of. It will become a war. Digital warfare is going to be the big one. So to us, how do you protect it? So if you have to protect, you have to build yourself. Simple as that.
No,
So
that's
I think-
great.
So I don't think the dependence on a third country to be able to define how you behave is an appropriate measure as we scale out. That's the way I would say.
No, that's a great advice for fintech players like Falcon, because we are in that race to make in India, sell in India and also take it global. So, Mahesh, I think we've been speaking for quite long, and I just want to have a quick fast five, what we
Sure.
call Falcon Fast Five questions. So, please say whatever comes to your mind, and would love to get your feel about it. So, one technology decision at Yes Bank that you believe will define its next decade.
I would say the way we're going to take AI in and use AI in the next 5 years, uh, various forms of AI, is going to be a defining moment. Digital was the past, but using digital with AI is going to make the change.
What's the most overhyped buzzword in the Indian banking system?
I would say today, if you ask me, mobile apps becoming a big FOMO. The buzzword is whose app is better, who's this thing. To me, I think doesn't matter, because at the end of the day, we as a customer use only about 10 functions in an app. Beyond it, we don't. But any app is today sitting with about 200 features, which is wasteful expense. As long as the 10 things work and work consistently 99.99%, your app is good and it's more intuitive, correct? So to me, I think a bit of overhype is on the way the mobile apps are looking. Obviously, AI is creating a hype, but to me, I think that hype will settle. But today's word is all about how you do your apps and putting everything on the front end.
Right.
I think that's something which is a bit overhyped. I don't think the banks are looking at leveraging the mobile differently.
Right. One underrated fintech innovation that you think deserves global acceptance.
UPI. I think UPI has been so successful. Ideally, if we were there, I would have expected it to be as big as Visa globally. It should have been in the ecosystem of every country, because every country uses savings account,
Yeah.
right?
True.
Some economies are credit led, we are still debit led. But otherwise, a large part of the third world countries should be and should have been on UPI. So I think to me that is one moment I always look back and say, why has it not picked up? Because that is a great make in India export that should have been propagated well.
And reverse, is there any global innovation that you think we should have seen in India?
Personally speaking, I would say that because I'm a car enthusiast, I would say that I would put it more as the physical infrastructure. Unfortunately, our infrastructure is not kept pace. So, which means if you ask me, outside of India, a lot of the third world as well as advanced countries have infrastructure that is taken for granted and is absolutely available. For us, it's a struggle. So, whether it's roads, whether it's transport, whether it is just the way we engage with each, or using the public transports and the roads. So, I think something that kind of adoption of some of those has not worked out for us. Because had that happened, I think the ability for us to develop more would have been there, which has unfortunately not come through. Very different, but that's what I would say it.
Got it. And the final question, Mahesh, if you were to hire one person and you have an option between a millennial and a Gen Z, who would you hire and why?
Good question. But to me, I would say that I would rather bet myself on Gen Z at this moment, because I'm open to be challenged. And I have seen that they don't hold bar a lot. They are happy to very engaging conversations on multiples, and they are willing to adopt change faster. That's something which I like. So I would rather bet it, because they are the future. So it also gives a two-way street to understand as to how nurture them also up the curve I think as leadership, you also have to nurture folks. So that also gives an opportunity to give back. That's the way I would look at it.
Great, Mahesh. It has been enchanting to have had this conversation with you. Thank you so much for giving your time, and I have learned so much from this conversation, and I'm sure so have our viewers and listeners. Thank you once again for coming, and look forward to being in touch with you as always.
Thank you, Chinmay, and thank you for the opportunity to being here first on your podcast. Thank you and look forward.